Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to the Dentist Money Show, where we help dentists make smart financial decisions. I'm Matt, and I'm here with our tax guru expert extraordinaire, Tom Whalen. How are you, Tom?
Doing good. How are you doing?
I think I keep adding things every time we...
You keep hitting some keywords like tax guru. That's the main one.
Tax guru, yeah. If you want to make a ton of money and pay no taxes, he's your... No, I'm just kidding.
Yeah, right.
He's the guy. So we are recording this. We were just talking, Tom, right in the heart of kind of that finish line, getting close to tax season being over, at least for our clients, right? Maybe not for a lot of clients out there,
right?
But for
our
clients.
Tax deadline for business returns for partnerships, S corps was on the 16th, just a few days ago. I've got all mine done. I don't know about anybody else, but we've got a lot of stuff done already, and now we're just finishing strong with the personal taxes.
Got it. And we were talking, we got to start with this because I was asking you before we got on, what's the big vacation or the thing you're going to do to kind of close out tax season for you to feel, it's like we had this massive sprint, got it all done. How are you going to reward yourself, Tom? Tell the good people.
It's not a sprint. It's a marathon.
I like what you did there.
No, I'm heading to Boston to run a marathon, so that'll be interesting.
Running the Boston Marathon. I had no idea you were a marathon. Is this your first one? Can't be your first one because you had to qualify.
Right. Yeah, so I did. No, this will be my third. I've done two before.
Okay.
Yeah.
How did I not know you were a runner? We've hung out a lot.
Pretty new in my world, so
yeah,
it's going okay.
That's amazing. Good for you. So this was a kind of a late in adulthood hobby you picked up?
Oh yeah, no. I did not run when I was younger. But I told my wife, I'm like, I'm really competitive. I'm okay enough at running, but I'm terrible at everything else. So I guess I'm just going to start running and just see if I can
see how it goes.
And here we are. Yeah.
Well, good for you. Well, I don't know if a lot of CPAs or tax experts would be rewarding themselves with a marathon after tax season, but good for you.
Training's not ideal this time of year, but
I bet not.
Getting through.
Yeah, that's awesome. Well, today, in the spirit of it being tax season, we thought it'd be a good idea to come together and talk. We've done the tax series, we've done several shows on taxes, but we thought it would be a good opportunity to talk broadly around big mistakes that we see. Really 5 big mistakes we see around taxes. And as always, not an exhaustive list, but kind of overarching themes that we see when it comes to taxes with dentists and the mistakes that they're making. I guess I'll start with this, and I want to get your thoughts, but I want to see if you kind of agree with this statement. From our standpoint, most dentists oftentimes don't have a tax problem. They have kind of an overall system planning coordination problem. Would that be something you'd agree with?
Right. Yep. So absolutely. On some level, the tax that you're going to generate some level of tax throughout the year, right? Like the more you make, you're going to have higher level of tax, whatever. But there is some level of tax that will be generated. Now, sure, with some planning and some strategizing, maybe we can shrink that a little bit, but there's still going to be this baseline level that you just can't really avoid, right? And if you don't know about that baseline level, that could be kind of detrimental, shocking, painful, all the above. But again, it doesn't change the amount. You know what I mean? So throughout the year, if we're communicating about all this, we have a good system in place. We know about the amount we can plan for, our cash flow set aside accordingly. Again, we may not have changed the actual number, but because we have a better communication system, it's much more smooth.
Yeah. And you're hitting on the big things in that kind of summary of things that we're hearing all the time, which is things like, why am I extending every year? Mm-hmm. And I have no idea. I'm making money, but I'm getting surprised. And I know I'm paying taxes, but I just feel like out of control with it. The big surprise tax bills every single year. I guess I want to emphasize and get your thoughts on this, but those things shouldn't be happening every year. Like, right? There's reasons to file extensions, but not every year.
Right. They're like, there will be times throughout someone's career where I extend their business return. Not this year, but
Yeah.
but there will be something's going to come up, right? Like there's some family issues, or you got a new building and there's a cost segregation study and they're not done with the cost seg, whatever. Like there's going
You didn't get a K1 in time or
exactly
something.
there's going to be these
Yeah.
things that pop up from time to time where it's like, yep, shoot, we have to extend. But there's so many people that we talk to that they're like, well, I know, can we get a copy of your prior year return to see how things are going? I haven't gotten it done yet. I'm like, well, why not? It's June. Well, they every year that's just what we do. And if I ask why, it's like, well, that's how we do it. I'm like, do you like to extend? No, I wish we could get, you know what I mean? So there's just a
Yeah.
lot of times people, it's normalized. It's just what they do. And they've gotten into that rhythm.
Yeah. Is that talk about the extensions here for a second? When CPAs just file extension, because we've seen this, it's just like what you just described. We see it all the time, where it's like, yeah, I don't know, we just do. Is that just a result of accountants having a poor system? Is that what would you say that comes from?
So it could be, it certainly could be that, but it could be that they've got a whole pile of returns to do and they've got only so many people to do it. So they're like, well, let's just, instead of breaking our backs for 3-4 months, why don't we just kind of smooth out the workload? And
Got
that
it.
just like that way we're not rushing through things. So maybe they kind of portray it as like a benefit to the client that, hey, if I'm working 85 hours a week, that 82nd hour, you're not getting 100% of me. So why don't I just work 60 hours a week, but I'll spread it out longer. And then that way, you're getting all of my attention. So
Yeah.
there's multiple reasons. Some are reasonable, some are not so reasonable, but yeah, there's a lot of reasons.
Yeah. Yeah. That makes sense, and we want to kind of drive that point home that again, there are reasons to do things like extensions, but that shouldn't be the norm.
Yeah, and I would
That's
say too, like if I were to know, let's say I extended, I don't do this, but let's pretend I extended half of my clients roughly to just spread out my workload. If there were clients that were just really opposed for whatever reason, like I don't want to extend it, just want to be done with this stuff, then internally I would plan accordingly, right? Whereas a lot of times what we see is there's just no communication. They don't, hey, this year it's done in February, next year it's done in July, and I have no idea what went differently. And that's just kind of seems like a crapshoot. So
yeah.
that's not okay.
Yeah, absolutely. And you highlighted it just there and throughout this intro here that taxes are the output, they're the result, they're there no matter, like the taxes are going to be the taxes, but planning is the key focus here. The planning, the coordination, the communication, that is very different from tax advisor to tax advisor, and a really critical point here as we go through these kind of mistakes that we see. Anything else you want to add to just kind of the overarching discussion here?
No, I think it's a good baseline, good starting point.
Okay. What I want to emphasize here is just, speaking of something like filing extensions or whatever, all this is so related. So the hard part from our side as a planner, as financial planners, on this side of the business, is if you're filing extensions every year, it's really hard for us to plan things like cash flow or debt management. So that's where it can, again, this should all be kind of the connected part of your plan. So one little thing that you take for granted actually has a ripple effect to the overall big picture, and we see causes a lot of stress for dentists of just not knowing where they stand.
Yeah, and a couple of things. One, everybody's situation's so unique, so hyper individualized that it's like I don't like making generalizations about just anything really. It's where it's like we should extend, we shouldn't extend, like, and maybe the financial advisors, they have reasons, whatever, but I don't like making these sweeping generalizations where we're kind of hearing that in the marketplace a little bit where it's like, oh yeah, this is just what they do. It's like, well, maybe that is what someone should do for practice XYZ.
Yep.
Your practice ABC, and you have a different set of circumstances and we need to treat you differently.
Yeah.
So that's one thing. I forgot the other thing I was going to say, but it'll come back to me. So
yeah, that's okay. And that's a good lens to look through as we go through these mistakes, is the uniqueness of your situation. And everything we talk about, this is going to be general type discussion that can be applied, should be applied to your situation, but with some nuance depending on what's going on. So
now, I remember what I was going to say. I'll want to caveat, I guess, a little bit of this where again, specifically with extensions, but just kind of good communication and whatnot in general. I think what we're talking about today assumes that the client is doing their part, right? Like,
Yeah,
they're getting the stuff on time. If they don't have their accountant doing the books and the payroll and this and that like that, they're doing a good job with it. They're reconciling their accounts monthly. If that's not the case, then of course the CPA is they shouldn't be held responsible for late filings and whatnot. But
sure.
I think that's what our conversation should be assuming for today.
Yeah, I'm really glad that you mentioned that caveat, because that is something that gets lost sometimes with dentists, is them understanding their role in all of this, whether it be tax discussions or just personal wealth, investing, debt, whatever it is, whatever the financial topic is. There's always a two-way uh, discussion here of like the effort. There's effort on both
Yeah,
sides,
right.
basically.
Yep, for sure.
So I'm glad you brought that up. So let's go through these 5 mistakes and kind of let that kind of guide the rest of our discussion today. So mistake number 1 that we see all the time is when dentists or CPAs, but dentists treat taxes like a once a year event. I want to just you get your first reaction to that.
Yeah, it's like it's a game. It's like you're gambling, right? Like, let's just go put it all on red at the roulette wheel and just see what happens. Like,
Yeah.
it's kind of what you're doing. Here's my stuff, and I sure hope I get a refund, right? Like, that's not a like there will be times where that works, but just because something works doesn't mean it's a sound play. So again, it's like maybe you got a $50,000 refund or you owed 50 grand. I think it's easier to deliver the refund news than the owing news. But in either scenario, somebody either you got to scramble for 50K to come up with, or you didn't have that purchasing power, that liquidity, and you had no idea. So it all comes back to liquidity, I guess, in my opinion, with all this, and just it's you might as like I said, you might as well go to the roulette wheel.
Yeah, yeah. And I think part of this, I mean, it kind of speaks to what you just said. It was with the caveat that there's effort on both sides of the CPA and the dentist to actually put the time in, that's required, and the effort that's required to not treat this like a once a year event. I think one of the issues here is that dentists are busy.
Mhm.
And I think there's a lot of CPAs, Tom, you can speak to this from a lot of experience, that, you might be there being like, hey, we got to meet, we got to review your quarterlies, we got to review this or that. And maybe the dentist just is like, I'm too busy for this. Let's just meet at the end of the year, meet next year.
Yeah,
I think that's a huge problem too.
Yeah, it is. And the thing that I've grown to, I guess, understand and I guess appreciate or respect throughout my years of working with dentists is like when I first started in this world, I'm like, oh my gosh, they work, 4 days a week, sometimes 3, maybe 4.5.
What a cush life they have.
Right. But like, it's like every minute of every day is scheduled. And
Yeah.
like that just doesn't, like, for me, I work a lot of hours, but I'm very flexible with my time.
Yeah.
So I'd almost prefer it. But when it's like every minute of your day seems scheduled, when you're done with your scheduling and somebody else wants to schedule something else, I can totally understand how it's like, I just need to chill out a little bit.
Yep.
Back off, Tom.
Yeah.
So I get it and I give some grace, but that's like, that has to happen. So yeah, I mean, we want it to be a two-way street. Now, if you're a business owner or practice owner, there's going to be your business filings first, and then you got your personal filings that come after that. If your accountant is like handling the books and kind of doing all that stuff, I would think your business return ought to get done on time, because there's not a lot that you need from the client at that point. Now, when it gets to the personal tax side of things, it's like, hey, we need your spouse's W-2 and your brokerage statements and, your home mortgage, like stuff that we don't have access to that we need you to fill in for us. But when it comes to the business return, if your accountant's kind of handling everything, that stuff should be getting taken care of throughout the year.
Yeah. Yeah, definitely. And you're right. I've had the same experience as I've done this now in the dental space, specifically for, the better part of a decade, just how rigid their schedules are and how overwhelming their daily life can become being practice owners. We understand, and taxes are usually among some other topics, but taxes is top of the list of things that I think it's easy for a lot of dentists to just be like, I don't even want to think about this right now.
Out of sight, out of mind.
Out of sight, out of mind.
Whatever,
Yep.
exactly.
Yep. Totally get it. But want to hit a couple of things of like what this can cost you. And then with each of these kind of hit some suggestions for a fix. things to be thinking about. But I think the cost, there's a couple of things. Missed strategies, right? I think there's certain things that have deadlines, or certain things that have to be put in place beforehand throughout the year, whether that be with retirement plans
Yeah.
or planning for tax credits, things like that. Missed strategies, no ability to adapt or adjust if you're waiting just till the end of the year or beginning of the following year. And then I think a huge one we see is, you highlighted it earlier, is surprise outcomes,
Yeah.
surprise tax bills. And I've seen equally, Tom, a dentist, depending on their mindset and how they approach taxes, I've seen equally dentists be mad about surprise tax bills, but I've also seen them be equally angry at surprise tax returns. I've seen both, or where I've had clients who are like, every single year I'm getting these massive refunds. And that's what I meant to say, not return, refund.
Sure. Yeah.
And like big refunds, like 2-3 years in a row. And they're like, how are we not planning this better? So I think both can be frustrating, just these big swings or outcomes on either end of the spectrum.
Yeah, absolutely. I mean, I think you said it just a minute ago. The ability to adjust is so huge, because again, when you do it the one time a year, say it's March, it's like there's very few things you can do at that point. I mean, very, very few things. And typically it's going to cost a lot of cash. It's like, oh,
Yep.
can we go do a profit sharing contribution for the office? Well, it's going to be $80,000 and it might save you 30 in tax. Shoot. It's like, that's might be a good move, but it's like, well, then you need the cash then. And so, and that's like I said, there's just very few other things you can do if the year's already over.
Yep.
So yeah, no ability to adjust. And then, yeah, like there's just, I kind of said it earlier. If I'm working 1,000,000 hours a week, my brain it's just not all there. Right.
Yeah.
Versus if we're doing these planning sessions throughout the year when we're in our lower workload environment, there's just so much more that we can think of and just kind of hash out together. And you know how it goes. Like when you're just talking to somebody, things just happen organically. Conversations just happen. Like, oh, I didn't know you bought this building, or whatever, right? Like there's
Yeah.
that will just come up if you're kind of regularly communicating, versus if you've just got, hey, here's my 30 minutes to talk about some stuff that happened this year, right?
Yep.
So
Yeah.
that's I can't really like quantify that, but there certainly is value there.
Yeah, definitely. So you just highlighted the fixes there for this mistake being, make sure you're doing projections throughout the year, specifically a mid-year projection or just projections along the way, and then ongoing communication with your advisor team, your tax advisor team, I think would be huge. Mistake number 2, this is really connected. We've hit, I think, a lot of these kind of concepts even just before, but mistake number 2 is hiring what we'll call a tax historian
Yeah.
instead of a tax planner. Any thoughts on this one?
Yeah, I mean, I think easy is a strong word, but I think I'm not gonna throw myself in the CPA profession under the bus, but
You can, it's okay.
sure. But it's easy to do, right? Like here's my stuff, do my taxes. Like, okay, like you're giving me the information. I just got to make sure it goes in the right spot on the return,
Mhm.
right? Um, so it's like if I'm a teacher, I can grade a test, right? Like it's already done. Like you did the work. I just got to make sure things are right or wrong, whatever. But yeah, like that's like that needs to happen because you need to have your taxes prepared.
Yeah.
But that's, to me, is like a commoditized business. And it's like, if that's what you're going to look for, go get the absolute cheapest provider you can get. You're not getting, like, the value is of course in the planning, right?
Yep.
Where we are forward thinking, or like we're talking about, hey, what's income this year, next year, the year after? Are there kids in the mix? Like, can we move some stuff around for them? Like that's where the real value is. And of course, that's not going to be the commoditized business, but
Yeah.
you get what you pay for.
Yeah, totally. I'll give a quick example of things that I think these are maybe higher level things that maybe dentists don't think about, but this just came up in a conversation with a particular client around cash flow planning, and specifically the schedule of amortization and depreciation falling off.
Mhm.
And when you're planning around cash flow, that's really critical when it comes to how that impacts your tax bill. You said it earlier. We have this all the time. Dennis buys or builds a big brand new building. They do a cost seg. Well, eventually those things are going to fall away and taxes are going to change. And if you're not being proactive or if you don't have a team that's proactive thinking about this stuff for you, tracking your depreciation schedule, your amortization schedule, and what that's going to do to your overall cash flow, that's a huge thing that can be really, really frustrating.
Yeah, and
And
depending on the size of your practice and if you bought a practice, say you bought a practice that total sale price was 300 grand, like it's going to be a lot less noticeable versus if you bought one for 2.5 million, right?
sure.
But actually, I was having the same conversation with a different, I guess, I assume it's a different client because I have no idea what you're talking about, but
Yeah. Yeah.
um, large practice, they bought their practice on a 10-year loan. You got some deductions towards goodwill. That's a 15-year deduction period. Then a bunch that was towards equipment, a 5-year deduction period. So the first 5 years feels pretty good because we're taking
Yep.
equipment and goodwill deductions.
Yep.
And those deductions are like more than what my loan payment is. So like I'm right side up on the tax versus cash flow situation.
Yep.
Well,
Yep.
from years 6 through 10, that equipment's gone, and I've only got the goodwill, but that's like a slower pace than the principal goes. So years 6 through 10, we're talking about like, hey, your cash flow is not gonna change from the practice operations in theory. Now, of course, if you add an associate, whatever, but all else equal, your cash flow is gonna be very similar, but your tax bill is gonna rise because those depreciation deductions are falling off.
Yeah.
So you're going to feel like you're paying a much higher tax rate. It's like, no, your rate's actually not going up. It's your taxable income's going up, even though your cash flow is not going up. So it's
Yeah.
just education, I guess, because like when we say depreciation, amortization, clients' eyes just kind of glaze over and like, I don't know, like, tell me when it matters. It's like,
Yeah.
okay, in year 6, it's going to matter, right?
Yeah. Yep.
Now we're coming up on year 6.
It matters.
Exactly. Yep.
Yeah. And to that point, even just the topic around something like depreciation and amortization, um, the difference between like a tax historian or filer versus a planner, they should be talking to you about how you should be, like, should you take 179
Mhm.
on that purchase, or should you put it on a normal schedule? Like, these things are really, really critical. And tell me if I'm wrong, Tom, but I would say, and again, in no way like to your point, throwing shade at the industry,
Yeah.
but I would say the default position for most CPAs is living year to year and just, how do I get my client to not be mad at me? So I'm going to maximize these deductions as much as I possibly can in this year, and I'll worry about it next year. And because I think a lot of times it's hard to have a conversation with a client and say, hey, we're actually going to we're not going to maximize deductions this year, um, because we'd rather extend this out over the next 5 to 15 years, because we project out your income actually doing, climbing. Here's why we're going to, like, having that nuanced conversation. I think a lot of CPAs just, whether they're just overrun with business and can't have it, or they just don't want to, that's a problem when it comes to this historian mindset versus an actual tax
Totally.
planner.
Absolutely. Yeah. I mean, I think a lot of it is it's like everybody's super busy all the time forever and you can never get a hold of anybody. Right.
Yeah.
Well,
Yep.
in that world, why would I, the CPA, want to put more time in? Right. It's like, we look at each year in a vacuum and, okay, great. We can take some more deductions. And then next year we'll figure it out next year.
Sure.
And I would say part of that is maybe just a problem with the relationship. Like sound like a counselor here, but it's like
you need to go to therapy
you
with your CPA.
it could be with your same CPA, but like if what you're expecting and paying for and getting is just this once a year type of meeting, it's like how can I dig in and think 3, 5, 7 years down the road if all this is just a one-time thing? And like that's what I'm going to do. I'm just going to try to maximize deductions, but that's where we're like, again, on our end, we do like to have a kind of like a full scale year-long relationship looking into the future. How are things going to change? Again, we want to take our deductions against our highest bracket income. That's just how we want to manage the tax brackets, and we can't do that effectively if we don't have the full scale.
Yeah, definitely. And to bring back the caveat you mentioned earlier, I think it's critical to repeat it here in this kind of mistake, is that, again, it's two ways. And to defend CPAs here again, there are times that it's not always the CPA's fault. If, like, there are situations where the CPA is wanting to be proactive and the client is either too busy or is not getting the right data on a regular basis. Like, there are situations like that. On the flip side, we've seen time and time again where Dennis says, I call my CPA, never answer, or I email and it goes into this ether. I don't know who is, I don't have a person even. I have like a like a tax team, and then
Yeah, there's a
I'm getting
tax person.
responses from
We got a bookkeeper, a tax
yeah,
person, a payroll person, somebody that handles my investments, but then somebody who handles the 401k, and I
yes,
don't even know where to begin.
yeah.
So yeah, that's really tough on
Yeah, that is really, really hard. And I think there's a fix there is like make sure the group you're working with, you have streamlined, really clear communication of who's my person.
Mhm.
Is it clear? Is it consistent? Do they answer my calls? Are they proactive in their communication? And then am I providing the proper numbers that they need throughout the year and the data, the clean and accurate data to be able to do this planning as opposed to just be an historical record of
Yeah, and
my
we
tax
hear
bill.
it so much, so much where it's again I left 3 emails and 4 text messages and a voicemail, and 3 weeks later, I finally got a return. It's like,
Yep.
gosh, that's not how it's supposed to be.
Yep.
I remember when we were growing and trying to add, new business, like we were pumping up. We know dental. We through and through, we know dental. And that's how we got some clients. But now lately it seems like, oh no, you answered the call.
Yeah.
Well, let's tell you about our dental knowledge. Yeah, yeah, yeah. But you answered the
Cool.
call. I'm
You
like,
just
okay, I
yeah.
want to get to that. And it's like a bummer for me as a CPA that's kind of pretty normal. Because I don't want people to view, I think rising tides raise all boats, right? So I don't want
Yep.
people to just view their relationship with their CPA as this struggle and something that's just like got this negative connotation. But I want to get back to the days of where we can sell based on our knowledge and our expertise versus, oh, you responded quickly. Like, well, anybody can do that. But
Yeah.
yeah, that's just like that's a really, really common thing that we see is and again, if your communication's so lacking like that, then it's hard not to be a historian because if you're just not talking until it's time to do your taxes, like that's all
What else?
the
That's
only
all you
option.
can do.
Yeah.
Yeah, totally. Makes sense.
Mhm.
Makes sense that the it sounds like you're saying the bar is sometimes pretty low to be able to reach. Mistake number 3, we see we've talked about this in the last tax series a lot, but letting the tax tail wag the dog, wag the overall wealth dog, we'll
Yeah.
say.
This one I will put on clients. Right. And
Yes, yeah, yes. This one is almost always the the dentist's fault.
right. Um,
Yeah. So this is like things like chasing deductions, overvaluing the concept of I saved on taxes,
right. Like a write-off. It's
a
like
write-off.
you're still
Yep.
negative cash flow on a write-off.
Yes. Yes.
So
Uh,
that education is huge.
this is a tricky one. This one is always, I'd say the trickiest conversation to have with dentists. I think it's just sometimes can be a confusing concept for sure. Like taxes in general are confusing, but also because they're getting pitched left and right,
Mhm.
horrible deals, overcomplicated strategies and structures, all in the name of tax savings. I always think of one of my favorite quotes from a financial writer named Jason Zweig, who says, if you lie to people who want to be lied to, you're going to make a fortune. And there's so many people out there
Yeah.
that A, lie to you, and B, that want to be lied to. That match is always going to be out there. I think this is probably the top culprit is tax saving strategies.
Yeah, I mean, when you start throwing dollar signs in front of things, people's ears perk up. And I just taxes specifically, it's like there's this really harsh, people will pay like again, these are kind of subpar investments. They don't mind throwing money at those, but it's like you pay your tax bill on time and it's just the end of the world. So
Yep.
there's so much out there where again, anything to save $1 in taxes. I'm like, well, to save $1 in taxes, you're gonna need $3 of cash.
Yeah.
Right. So we gotta be smart about it.
Yeah, definitely. And we've talked about this again when we were doing the tax series that this sounds crazy, Tom, but the truth is tax saving on taxes is I don't think ever or should ever be the number one priority. Is that a fair statement? It's a secondary priority to building wealth.
Right. So yeah, because it's like, what do you just in the wealth vacuum? We'll say it's like, what's the goal? Well, to end up with a bunch, right? Like,
Yeah.
I don't
Yeah.
know. What does that mean for you? It's different for you, for me, whomever, right? Everybody's enough versus a bunch is it's an arbitrary number or subjective number, I should say. But I want to have a bunch of money that's my money. It's like, okay,
Yeah.
well, that's after tax. Like that's what
Yep.
that is, right? And
Yep.
we want that number to be a big number. Okay, well, the tax, even if your tax rate blended is a 33%, it's like, well, that's 1/3 of the puzzle. The other
Yeah.
2/3 is making a bunch of money.
Yeah. Yeah.
So let's maybe focus on the bigger piece of the pie first, and then we'll deal with the taxes secondarily. But
Yeah.
we have so many conversations and people are just chasing left, right, and center all these different deductions. I'm like, you could spend all this effort just raising that top line and you're gonna be much
Yeah.
better off than the 30 grand of tax you would have saved.
Yeah, such a good point. The idea of like opportunity cost of doing these types of things versus just raising your income, which raises your tax bill, but also increases your after tax wealth.
Right.
Like sometimes it's that simple.
Mhm.
And by the way, we are all for thoughtful tax strategy. It's a huge part of what we
Yeah.
do as a business is yeah, let's not pay unnecessary taxes and let's reduce taxes where possible. But it's just in our mind, it's always kind of a secondary part of a bigger picture goal of designing a strategy and designing your life, designing your business and your, the purpose behind all this. Taxes are always in our mind kind of a subtext to that, not like number one priority.
Yeah, and I mean, if what you're doing to save a bunch of taxes are these kind of like shady investment deals that are maybe questionable at best, or you're tying up all your liquidity, like that can like damage your future profit
Absolutely.
practice, right? Like you can't make that at other investments that you would have, like you said, to opportunity costs. So
Yep.
like strong positive cash flow and liquidity is so huge. And then it's just like I always ask this question to my client, like, is this gonna make money? Like just don't worry about taxes. Is
Yep.
this going to make money? And if the answer is yes, then okay, let's
Cool.
talk about it. But a lot of
Yep.
times we hear, yeah, I don't know, but it's like we get this huge write-off.
Yeah.
That's I don't like that answer at all.
Yeah. Yeah,
Yeah.
exactly. And again, when done right, you can do like I'll give you a quick example from today. Everything you just described was a client I talked to, we worked with her for a long time, for years. We just implemented a cash balance plan because it fit with her overall where she is in her stage of her career, cash flow, liquidity, debts plan, everything all in place. She's got incredibly high cash flow because she's done it right. She's latter part of her career, put a cash balance in place. This is the first year, 2025 was the first year she funded it. Her tax bill was reduced by like $150,000.
Yes, probably put in 300 some odd thousand bucks into it.
Significant tax reduction, but it was so she's done it all right. She's kind of put the plan in place, and now she is being rewarded with being able to put away multiple six figures in this plan, reduce her tax bill by six figures, and not jeopardize her liquidity. But
Right.
she didn't chase anything. She did it in due time. So I want to highlight something like that because to say there are situations, dentists out there, like there are situations that you're going to put a strategy in place and be able to save six figures plus with one thing. And by the way, keep the money,
Yes,
but
right.
it's just something you should never be chasing. It should be a
Yeah,
part of
and
the bigger picture.
like on the opposite side of that same coin, I've had clients approach me. They're like, "Hey, I've heard about this cash balance thing," and I'm like, "You're having a hard time making payroll next week, brother.
Yeah,
You only
exactly.
make 300 grand. Like we're
Yeah.
so far away from that. Like we
You've
need
got no liquidity. Yeah.
exactly." So,
Yeah.
I guess where I'm going with that is the same strategy could be great for somebody, but awful for somebody else. And it goes
Yeah.
back to the whole everybody's situation is so uniquely different that it's like we need to again treat everybody differently or uniquely, whatever. But now that cash balance plans are awesome when they're awesome. But again, if you're not there, then it's a terrible idea.
Yeah, I'm so glad that you brought that counterpoint because yeah, we've seen that same thing. Same tool used improperly can be a disaster. So
Yep.
I think it's a great point. So fix here for this mistake, the mistake of just letting the tax tail wag the overall dog is just start with your goals, start with your overall design,
Yeah,
your
start with the end in
plan.
mind. That's I can't remember the writer, but Seven
Co-
Habits of Highly Successful People.
Covey.
Yeah,
Yeah,
yeah.
Stephen
Start with
Covey.
the end in mind, and like again, I think a big number for again, I don't know, I can't define that for anybody. After tax wealth, I think is the goal when people are talking about all this stuff. Like,
Yeah,
hey, you want to save on this and that, you want to save here and there. I think what the goal really is to end up with big nest egg at the end of the day.
yeah,
Let's start
totally.
there. Now, how can we get there? And
Yeah,
of course, taxes are they certainly are part of that, but by no means are they the main.
totally. I, I think what we just said there too with all of that is sequencing matters. That's the most important of where you put what you focus on and when matters. more than like I save taxes here or there,
Yeah,
like
and
the sequencing of it all.
you cannot reduce your tax bill enough to, like, you can't save taxes to wealth. You know what I mean? Like, you
Yeah,
can't, like, there's only so much you, like, because you can bring your tax bill down to zero in theory,
sure. Make
but
no money.
well, sure, but like, let's just say you're generating, pretend you were generating 50 grand a year in tax, and we saved you down to zero for whatever, however, like we got there. Well, that's your maximum number. You can't do more than that.
Yeah,
It's like, but your earning potential and investment growth and whatnot is unlimited in theory, right?
yeah,
So you're capped on what you can do to your after tax wealth by tax savings, but you're not capped on making more money and investing and letting that money grow and make more and more and more, right? So the tax savings is certainly capped, and it's a smaller number to begin with. So
yeah. Such a good point. Such a good point. Yeah. Mistake number 4. Uh, there's a couple different ways to word this, but no one's quarterbacking the plan. I'll just kind of add uh, a little bit more to this. We'd say the mistake just being there's no coordination. There's
sure.
no like it's just whether that be we said that earlier where you're working with a CPA team and you don't have a person, and we've heard this so many times. It's like I don't have a person. I work with the team, but like I don't know who the quarterback is and
Right.
I don't know who to contact. Or you may have a person like as a CPA, but like they're not acting as your quarterback. Some do, some don't, and you don't know kind of like how to connect all the dots together. So just no go-to kind of quarterback.
Yeah, we've had it where actually recent client we onboarded, we were just kind of asking about their prior setup, and this was the number one thing. And she's like, I gave access to, like, for the banks, the credit cards, the loans, like, to this company through employee A, and like they have everything, and but employee B, C, and D are the tax team,
Yep,
and they're saying, hey, we need all this stuff, and it's like, well, no, you already have that stuff, but there's like no communication going on in this company. I'm
exactly.
like, well, that kind of stinks. And so she's like, but I don't even know who to go to with my issues now, because it seems like they don't know what's going on either. But then, you might be talking with employee A who's suggesting something, but employee B who's doing the taxes doesn't know that employee A suggesting something.
Yep.
Again, it can be a great move, it can be a great idea, but if I'm unaware of it, like, that's not ideal.
Yeah.
We see it a lot where the CPA and the financial advisory team is piecemealed, and that's totally fine. But again, there's times where we're doing kind of some cash flow planning and it's just tax projections and whatnot, and all of a sudden at tax time, we see that they did a Roth conversion of $70,000. Kind of needed to know that.
Yep.
Now I'm going to have to tell you that you owe 25 grand,
Yep.
and you're probably not ready for it, but the advisor might have said, hey, this is their lowest income year they'll ever have. And that very well may be the case. It'd be a good move, but we didn't plan for it because we didn't know about it. And now we've got, again, conflicting information a little bit. And it's just the client is the one who's got to buck up, obviously. And it's like, that can be devastating.
Yeah. Can be really frustrating, especially when there's no communication. And this concept comes up a lot, not only with like the external team you have of advisors, whether it be CPA, financial advisor, and like, insurance, attorneys. This concept comes up a lot. We see within dental practices. And we at Dentist Advisors struggle with this sometimes, always talking to our leadership team about this of it could be possible that everyone's doing their job, and it most likely is. The question always is who owns the outcome? We're always asking that question. Who owns the outcome of this initiative, of this project, of this KPI? So that's a question that dentists should be asking within their own team. But also when it comes to their wealth, who owns the outcome here?
Sure.
And you highlighted it of, the CPA team, tax teams over here, the advisors over here. They're not coordinating or communicating individually in their silos. They're doing their jobs.
Right.
They might even be being pretty proactive with you. But if you don't have someone owning the outcome, I think it's going to lead to some frustration and miscommunications like the one you highlighted.
Totally. That's, yeah, again, like that could be the right move. It really can. And we might have agreed with it. And like I said earlier, we may not change the tax bill, right? Like we might say, hey, yep, we agree with that. Knowing that 8 months in advance, now we can squirrel away a little bit of money. Maybe
Yeah,
they wouldn't have paid down XYZ debt. Like,
exactly.
I mean, like, it's just, we know now. So we
Yeah.
can build that into the plan.
Yeah, definitely. So fix here, ideally you have an integrated team of some kind,
Yep.
whether that be
It doesn't
all
have
on
to be the same company for everything else.
exactly.
That I would argue gives you the highest likelihood of success.
Yep.
But we got a number of clients where, we've got a outsourced bookkeeper, and then we're doing the tax work, and you guys are doing the
Yep.
investments. There are times where that works, but it's like it does at least open the door a little bit.
Yep.
Could maybe go awry, but again, it doesn't have to be the same overall unit.
Yeah.
But they do need to be on the same page.
Totally integrated in some way. Totally agree. And ideally you've got one person, whoever that is in your life, that's coordinating these people
Right.
together ideally.
Yep. We get
Um,
so many clients that are just like, Tom, I know this isn't something that you're going to do, but I don't know where to start. So I'm just going to go to you. And okay, that's fine.
yeah,
I know
great.
it's not anything either, but this is your insurance guy that you got to go talk to, or hey, this is
Yep.
Matt to discuss. But again, I might be the quarterback in this relationship. And it's like,
Yep.
I love it. Just start through me. That way, like I know what's going on too, then.
Yep.
I think that people really like that.
Yeah, totally. And ideally, to your point, the team's just integrated in some way and communicating in some way on a regular basis. Okay, mistake number 5. This is kind of a counterintuitive one, but I think it's worthy of talking. Is mistake number 5 is not knowing if your CPA is actually good,
Right.
not knowing how to evaluate your CPA or your tax team. You want to talk on or speak to this one?
Yeah, it's tough, right? Because like, well, hey, is your dentist any good?
I think.
I think they're good.
Yeah, yeah,
I, I had a root canal a few years ago and it didn't hurt too bad. So they're probably pretty good. It's
yeah.
like, oh, what happens if the crown that got put on there falls off in 30 days thereafter? And because
Yep.
whatever, but it's tough because you don't know the nuanced industry like that CPA does. And
Exactly.
dentistry, whatever. In every industry, you don't know it as well as the professional in that industry. So it's hard to like have an objective answer to that. But it's like I would ask somebody, I'm like, is your CPA any good? Or how do I know if my CPA is any good? It's like, well, what are your pain points? Or like, what are your frustrations? Or what are the problems that you want alleviated by this person? And are they doing that? Now, again, like your perception might be different than mine. Like I might never want to owe $1 of tax. I might say, listen, all I care about is having a refund every year. Okay. Are they doing
Yeah.
that for you? Because I can do that for every client. Like I'll
Yeah.
just rank up your tax payment, your estimates, right?
Yeah,
Or
we'll just put your W-2 to 400 and put it all to
put it all
taxes.
withholding. Yeah. So,
Yeah.
like, but if that's their number one and only concern, okay, we can do that.
Yeah.
So,
Yeah.
like, what are your pain points just in general in your financial world, financial tax world? Are they able to address those pain points for you? Now, of course, we want to know if they know the industry, kind of can do some benchmarking for you and have nuanced conversations about practice growth and staff
Yeah.
retention and all these things. So like I would love for somebody for that to be their answer. Like, hey, they can have great nuanced conversations about my practice with me specifically, with about dentistry in general. And yeah, then they seem like they're pretty good at it. Okay, great. But a lot of it, I think the starting point is like, what are you trying to get out of this relationship? And are they able to do that? And
Yeah.
sometimes, yeah, like, or I will say a lot of times, like the answer is yes, but sometimes it's they're falling short and I don't know what else to do. So I'm just going to keep coming back.
Yeah. 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 They default to it's familiar, convenient. They don't want to switch because it's just kind of overall like attrition. And the idea that switching any professional like a CPA would be, I think they assume like, oh, it's just a nightmare to do that. Or something we hear a lot. We hear this a lot where, oh, I'm working with my dad's old CPA that he's just, old timer that he did his taxes.
Sure.
Now he's doing mine. He's super cheap.
We
So
call
they
them
default to
Uncle Bill,
price.
These
Yeah. Old Uncle Bill. Yeah. We hear that a lot. And if you said it earlier, if your number one priority is the example you gave is just getting a refund every year. The other example I'd give is if your number one priority is just cheap, like I just don't want to pay my CPA a ton, great. Like that, you can get that done with old Uncle Bill.
Yeah.
He might only charge you $500 for the year to file your taxes. The question always becomes then, well, what is it costing you in all the other things that we've highlighted?
Yeah. We hear it a lot too, where people are like, I'll, let's talk like, let's switch after tax, like after my taxes get taken care of. Let's
Yeah.
switch. Or like there needs to be a certain time of year. Oh, Tom, you're so busy this time of year. We don't want to switch. We don't want to put that on you. I'm like, don't you worry about me or our team. Like, we'll let you know if it's a better time. But generally speaking, it's like, again, opportunity cost. We said it a few times now. Like, what are we missing by, okay, hey, you want to wait till after tax season's over. Okay, well, then we might have a vacation plan and you might have a vacation plan. And now it's the end of
You're
July.
running a marathon.
Yeah. But like it's the end, say it's the end of July now. Like, okay, we missed out on 6 months of planning and
Yeah.
production and whatnot. So like the best time to plant a tree is 20 years ago. The next best time is right now. Right.
Yeah.
So we kind of think that if there is a riff or I don't know, if you don't really like what you've got going on, why wait? I mean, just
Yeah.
it's familiar doesn't mean that you need to keep going back to the well.
Yeah, definitely. So the fix, I think, on this last one of just not knowing if your CPA is actually good, I think, is take a step back, evaluate what I'm actually looking for. We believe that the evaluation should be more than just the surface level things. It should be what value actually getting out of this relationship, specifically around things like proactivity, communication. Do they actually answer my call? Do I have a person? Do I have a person that I can go to that I have their cell phone number that I can shoot them a text if I need to, or I know how to get a hold of them? I think is super underrated. And then are they actually planning for me, and as opposed to just filing? And am I aware of my situation? Do I know what's actually going on from quarter to quarter to year to
Yeah.
year?
And like I said it earlier too, I'm like, I think industry expertise is like just so underrated because it's like,
Huge.
it is huge. And if you don't know the industry, may, I could say, hey, I'm a dentist and I just bought a practice 2 years ago. I would like to work with you, plan accordingly. It's like, well, if I don't know the industry, I don't know what to expect. Like, what does their trajectory look like? And I
Yep.
might just, well, you made 200 grand last year. Let's just plan for that. It's like,
Yep.
well, that's not how it works, right? Like, that's just, if we're going to go take more CE and get certified to do other procedures, and now we're looking at the seller and they made 200 but they were only working, I don't know, 40 weeks a year, 3 days a week, but I've got all these bills. So I need to work 5 days a week or 4 days a week. And I'm going to work 50 weeks a year. Like I'm going to project out a lot more than what somebody who doesn't really know the path of a typical dental practice or a young buyer that's a gunner. You might say, hey, they're not like, yeah, they're trying to plan. It's like, but is their planning sound? Like, do they know the industry to be able to kind of project out accordingly?
Yeah. Yeah. Great
So
point.
you can be a rock solid like nuts and bolts CPA, but if you don't have that dental expertise along with it,
It's
you're
hard to
you're
plan.
probably leaving something on the table.
Totally. Yeah, the industry expertise is a big one. I want to wrap up here with, so we've hit the 5 mistakes. Let's just summarize those really quick. I'll just kind of list them. So treating taxes like a one time event or once a year event. Number two is hiring a tax historian as opposed to a tax planner. Mistake number three is letting the tax tail wag the overall dog. Mistake number four is no one is quarterbacking the plan. There's no coordination or integrated team. And then mistake number five is not even knowing how to evaluate if your CPA is good. I want to wrap up here. You kind of hit it or we're referencing it, but let's just spell this, I think, pretty big myth that transitioning to a new CPA or to a new tax team is such a hassle or such a problem where it's so difficult. Talk maybe just like, let's just wrap up with like, what does that process look like, and is it actually a hassle?
No, I would say no. And frankly, if anybody would think it's a hassle, it's the new CPA because we're the one doing a lot of the work.
Yeah,
What I mean by that is, hey, we're looking at your financial statements. We're looking at your QuickBooks file. Hey, I can look at somebody's QuickBooks file and be like, their accountant knows dental. And I don't have to speak a word to anybody. I can look at the financial statements and just by the way that they're formatted and organized, I can tell you if they know dental or not.
sure.
If they don't, and if the financials are kind of in shambles from a dental formatting perspective, you, the client, you're not doing anything. We're doing it. We just, hey, give us access to your QuickBooks file. We'll take it from there. But typically, what happens is we have these onboarding calls, and what are we looking for, and the way we charge clients, we don't do the whole hourly thing. We just say, what services do you need based on your service listing, and everybody's got their own different service listing. So we just do a flat monthly fee. So we then, once we agree on everything, say, okay, we just let us loose to the accountant, right? We'll communicate with them. We'll get the information we need, old returns, old tax returns, financial statements, payroll reports. Like we'll get everything we need from them. You just need to give us the introduction. Now, if we're switching payroll providers, again, we're going to need access to these softwares. We might need access, like set us up as a secondary user on the bank account, credit card account, et cetera. But those things, it's like, I don't know, what does it take 5 minutes to go add me to a Chase login? Something like that. If it took an hour to do all the stuff that I would request somebody to do, that might be grossly overstating the workload.
Yeah.
So no, it's not difficult. Now, again, on our end, like, yeah, we have to just kind of new client onboarding for us. It just, there's some time involved.
Yeah, totally.
But whatever.
But from the client side, it's pretty straightforward.
Yep. Hey, go talk to my old accountant. Because sometimes people are like, I want to meet with Uncle Bill and tell them face to face. Respect that. Totally get it. Oftentimes they're like, if you'll do it all, like we just need you to make that introduction and then we'll take it from there.
Yeah.
So that's very, very common. But yeah, a lot of people are just kind of like, I don't know. It is so convenient with Uncle Bill. And I don't know, like it's just the unknown. It's like the devil you know versus the devil you don't know.
Sure.
And again, it's really easy to do nothing. In the moment, it's really easy, right? Because you don't do anything.
Yeah.
At all. Even if doing something is 5% effort, while doing nothing is 0% effort. So it's infinitely higher, right? But then the thing we always ask is like, okay, well, it's tax time again. You're extended and you owe $50,000 you had no idea you were going to owe. And is that comfortable? And again, it's in the moment, it's easy to do nothing always. That doesn't matter if it's accounting or whatever. It's always easier to do nothing in the moment. But overall, I'll say it on the rooftops. Like I don't think it's a lot of extra work.
Yeah.
For what you're potentially getting out of it.
Absolutely. This is great, Tom. So many good insights, and I think just things for dentists to be thinking about when it comes to evaluating their own situation. Anything else you want to finish up or add to anything that we've discussed on these 5 mistakes?
No, I mean, I think again, like the unknown, the fear of the unknown is like, it's so people are just so locked in like by that. Like, I don't know. I feel it's like they're still getting by. That's the thing is like, yeah, I owe 50 and it sucks, but I have the cash or like whatever, I'll make it work. But what if I switch to this other person and the same thing keeps happening? I'd rather just do nothing and I know what to expect now. I just would urge people to get out of their comfort zone a little bit. We're talking on, today is March 19th. And we're doing a podcast, and this is not meant to like toot my own horn, but like we're set up appropriately where I can manage this with you, right?
Yeah.
Like I'm doing my client workload, got all my business returns done, 0 extensions. I'm having a podcast meeting with Matt. Like, we've got it locked in. We're ready to take these new potential lead calls and client onboarding. So if you're ever wondering, like at least have the conversation.
Yeah. I think that's a great point, and a great way to finish this up is if you are listening to this and thinking, I do extend every year and I don't know why, or I do get these tax bombs and I don't know why, whether it be a refund or whether it be an actual bill, and you're thinking, I don't know where I stand. I do talk to Uncle Bill barely once a year, and it's really frustrating and stressful, and I'm tired of it. We built a system to make it easier and a process to be able to get you on a call, and we'd be happy to review with you. And to your point, it's just have a conversation and see how maybe getting another set of eyes on something can give you more clarity and less stress in your life.
Yeah, you can still decide to do nothing.
Yeah.
Right? That's totally fine too.
Yep. Absolutely. So if that is you and you want to talk to us, dentistadvisors.com/accounting, get on with Tom, get on with Marshall or someone on their team. We'd be happy to talk to you and review your tax situation. For now, if you're still listening, you are one of the cool ones. Tom, thank you so much for being here as always, and sharing your wisdom around taxes and accounting and how all this works. I'm guessing you got to get going and go train for your marathon coming up. So
got a big run coming up tomorrow.
Yeah. So we'll let you go, but appreciate you being here. Yeah. Appreciate you being here, everyone. Appreciate you for listening. Thank you. And until next time, take care. Bye-bye.
Adios.